Hey everybody, some big news to talk about today, which is UMAX by Hamilton ETFs, which is about to hit the Canadian market on the TSX. Big news. We're going to be discussing in this video just how this fund is potentially going to be structured. Because it hasn't been released yet, we can only speculate. So we'll do that. We'll also look at a similarly structured fund that I'm basing that evidence off of, and then we're going to talk about how you might be able to invest in it and how it might actually change a broader all-in-one fund by Hamilton ETFs, because just with this news alone is massive. And if you stick with me in this video, we will get through that. I think you guys will find it really interesting, especially if you're an income investor. As always, like and subscribe down below. It helps out the channel a great deal. There's a link down below. You can get some money from Wealthsimple. I think it's like 25 bucks. You get 25 bucks to start trading. I get 25 bucks as well, just because it's a referral code, and Wealthsimple gets a new client. So it's a win-win-win for everybody. Okay, so with that being said, let's get into the article. So even though this article is titled Nick Picard joins Hamilton ETFs as chief options strategist, Nick Picard is from Horizons ETFs coming over to Hamilton ETFs. That wasn't what caught my eye, although I do like to read income investing news like this, even if it didn't have the UMAX news. We can see here that UMAX, the Hamilton Utilities Maximizer ETF, anticipated to be launched in June 2023. The article also talks about, to a lesser extent, HMAX and the fact that Horizons ETFs is no longer going to be sub-managing it. Okay, so like I said, UMAX is the big drop because of the impact it's going to have on potential future Hamilton ETF products. So let's get into the potential structure of the fund. Now, in order to do that, we need to go to HMAX, which is the Hamilton Canadians Financial Yield Maximizer ETF. This would give us some great clues about how UMAX is potentially going to be structured. You can see here that HMAX has a really amazing yield of 14.36%. That's because, as I like to say, with cover call ETFs, there's two things we always want to look at. We want to look at cover call coverage and moneyness. Is it out of the money, at the money, in the money? And that will typically give us an idea of the kind of premiums that it's going to generate for monthly income. HMAX has 50% coverage on the entire portfolio. So on all of these funds here, 50% coverage at the money, which of course gives you greater premiums than out of the money. And we can see the weightings here of all the companies within it, all banking, insurance companies, which gives us that 14.36% yield. Take it, UMAX will be structured just like this. So if it is structured just like this, how can we invest in it? Can we invest in UMAX just by itself? Well, of course, or there might be another way you can invest in it if you are not aware. HDIF, which is a Hamilton Enhanced Multi-Sector Cover Call ETF. It was basically that, and HYLD, also by Hamilton ETFs, was the first all-in-one funds ETFs, an ETF that invests in other ETFs. You can see here it has a 10.02% yield on it. Now, why it's important of what UMAX might do to future or gives a clue to future Hamilton ETF products is the fact that HMAX is inside of HDIV. Now, I suspect UMAX is going to bump out ZWU, the BMO Cover Called ETF. It's going to bump that out, and UMAX probably takes its place. I don't want to make sure I don't forget for anybody who could be potentially watching for the first time. HDIV invests in all these different Canadian cover called ETFs. Okay, so we have different companies like CI, Horizons. We have a couple of Hamilton funds in here, BMO, Harvest, and another Harvest product. So what kind of clues could this give us to future Hamilton ETF products? Well, if we get a UMAX, well, why wouldn't we get, say, an EMAX for energy? Why wouldn't we get a TMAX for tech? or some sort of enhanced income maximizer for healthcare, or maybe mining, gold, in that nature, built with the same structure, 50% at the money type funds, which inevitably would push the HDIV yield up to a new average. I think that's going to happen no matter what with UMAX. I can't see this not getting UMAX getting added to HDIF. But one other big thing that this will do is it's going to reduce fees. Now, because Hamilton ETFs were the first to come out with all-in-one funds, they invested with HDIF and HYLD into other cover call providers. Now, there are similar fund managers in Canada that have done this already and have structured it very differently, that I think Hamilton ETFs is going to want to go in. And what I mean by that, you'll understand that in a moment here. So other similarly structured funds, all in ETFs that invest in other ETFs, is HDIV, which is a harvest ETF that invests in 7 harvest cover call ETFs with leverage on it. Brompton Funds does the exact same thing with BMAX. They have a bunch of Brompton products at different weights with inside of that, another ETF that invests in other ETFs. And what might end up happening is Hamilton ETFs may very well do this with HDIV and simply replace out all of these harvest products and Horizons and CI and build out their own suite of products that they fit within HDIV. If this is the case, this would make this all-in-one fund probably the most highest yield. It would be the most aggressive as far as coverage on the portfolio with each individual cover call ETF, and moneyness at the money. So the question is, how do you invest in it? Do you hop into HDIV now? And guess what? You'll probably see that natural yield potentially grow over time, but that's just it. It's major speculation to be doing this. UMAX hasn't even come out yet. It's not even in this in HDIV yet. But because we have HMAX here, UMAX, I can't see how would it not kick this out, and how would these other ones kind of be in jeopardy for potential other products Hamilton ETFs is probably going to come out with. Something I might do with this news is half of my TFSA is actually in HYLD. HDIV is an amazing ETF already, slightly lower yield, but I may just pull the trigger again. For those who don't know, HYLD actually constituted the entirety of my TFSA was HYLD, but recently I trimmed it down. Just there was some life decision that impacted that decision. I thought I would sell my place, which then I was going to use that money from the sale of my home to diversify, but because our family just decided to stay put, the backup plan took effect, which meant that I wanted to chop down HYLD to diversify amongst fund managers. So I may chop down HYLD even further just to get into HDIV and have exposure to UMAX. Even if I did that, I still want to have a small portion of my portfolio where I invest in single sector ETFs, cover call ETFs. But at least this would give me even greater exposure to these other amazing fund managers and the ETFs they provide. But why wouldn't Hamilton be wanting to create their own suite of products that they can put within HDIV and ultimately drive up yield and shrink those fees? So, and also it's a leverage fund as well. Forgot to mention that. There's 25% leverage on HDIV, which means, as I like to say, a $4,000 investment is going to act like a $5,000 investment through price appreciation, through the decreases, and also yield as well. That is a lot to speculate, talk about. Let me know what you think down below in the comments. And as always, do the cliche thing and smash all the buttons of like and subscribe variety. And I will see you in the next video.